All right, so you think about maybe investing in this company, Premco Global Ltd.
Okay.
It's listed on the Bombay Stock Exchange.
Right.
And we're going to kind of be your financial detective partners here.
Yeah.
We're going to take a look at the documents that you sent over and try to make sense of them
Love it.
and see if this is a good fit for your portfolio or not.
Absolutely.
So we've got two main pieces of the puzzle here.
Okay.
We've got this announcement from November 2024 about their second quarter results and a special dividend. And then we've got this longer document from May 2024 with their audited results for the whole previous year.
Gotcha.
So,
This sounds fun.
yeah, it does.
The thing that really jumped out at me was this massive special dividend.
Oh, yeah.
39 rupees a share.
Wow.
390% dividend payout.
What?
So that's a big attention grabber.
Yeah, that's a huge red flag for me right away.
Yeah, for sure. But I mean, it's like, what is the story behind it?
Yeah, like, is this strength?
Right.
Or is something else going on? Like, are they trying to, like, cover something up?
Right.
So to start piecing things together, let's look at these second quarter numbers.
Okay.
From November 2024,
Yeah.
their revenue for the quarter was over 5,165 lakhs.
Okay.
Now, lakhs is a term used in India.
Right.
1 lakh equals 100,000 rupees.
Gotcha.
So we're talking serious money here.
Okay.
They also reported a profit of 1,787 lakhs for the quarter. Those are some impressive numbers.
Yeah, they seem pretty good.
At first glance.
Right, at first glance. But you always got to look beyond a single quarter
Of course, yeah.
to get the full picture.
Yeah, one quarter doesn't tell you the whole story.
Exactly. So are these figures, how do they compare to the past? Are they consistent with an upward trend?
Yeah, are we seeing something unusual? Good point. It's like checking someone's pulse.
Yeah.
One reading doesn't tell you about their health.
Totally.
The November document also shows Premco's total assets over 12,088 lakhs and their total equity at nearly 11,712 lakhs.
Okay.
Plus, their earnings per share, or EPS for the quarter, hit 3.81 rupees.
Wow.
Bringing their total EPS for the first 6 months of the fiscal year to 17.30.
Okay.
Pretty significant jump compared to last year.
It is, yeah. But remember, these second quarter figures are unaudited.
Oh, right.
It's like getting a sneak peek at a movie before the final cut.
Before all the edits.
Exactly.
Oh.
So there might be some adjustments, once the full audit comes out.
Sure.
The key question here for you is whether this level of profit and growth is sustainable.
Okay, so we got to look back and compare it to those other numbers.
Yeah.
So looking back at their audited annual results from May 2024 to see if there's a pattern here.
Right.
Their total revenue for the year ending in March was 10,321 lakhs.
All right.
And their profit was 1,023 lakhs.
So revenue seems to be going up.
Yeah.
But what about profitability? Is that increasing at the same rate?
Yeah. Are there any inconsistencies? Okay, so their assets back in March were over 12,904 lakhs.
Okay.
And their equity was about 11,285 lakhs. Their earnings per share for the full year were 6.39 rupees basic.
Right.
And 5.56 rupees diluted.
Okay.
Now, quick reminder for everyone listening.
Yeah.
Basic EPS uses the standard number of outstanding shares, while diluted EPS takes into account things like stock options
Right.
that could increase the number of shares.
Things that could change the number in the future.
Exactly.
Yeah.
So
it's like comparing apples to apples.
Right.
Or basic EPS to diluted EPS.
Exactly.
Right.
But we also need to check their overall financial health.
Absolutely.
Right. A strong balance sheet is important.
Yeah, especially if they're planning to pay out those big dividends.
Right. Like making sure the engine's in good shape.
Yeah.
Before you take the car on that road trip.
Totally.
So are there any red flags on their balance sheet?
Right. Like high debt levels.
Yeah.
Could signal some trouble down the road.
Yeah. High debt can eat into profits.
Yeah.
And limit a company's flexibility.
For sure. And, another thing to look out for is a buildup of inventory.
Oh, yeah.
If they've got a lot of unsold products,
Yeah.
it could mean problems with sales.
Or production.
Yeah.
Exactly. So these are the kinds of details
Right.
that can really make or break an investment decision.
Absolutely.
And speaking of decisions,
Yeah.
there's this note in the May document about their plans to expand their operations in Umargan, Gujarat.
Okay.
Could this be a good sign?
What?
Or is it adding another layer of risk?
It could be good,
Yeah.
but it depends. How are they funding it?
Right.
Are they taking on more debt?
Yeah.
That could put a strain on their finances?
Yeah, and impact their ability to keep those dividends up.
Exactly.
Interesting.
Yeah.
So is this a way to like,
Is this a reward?
yeah, reward investors before they take on more debt?
Right. Are they just trying to look strong?
Yeah, project strength.
Even if things aren't that great?
Even things are a bit tighter behind the scenes.
Exactly.
So many questions.
Yeah. Is this dividend a sustainable part of their strategy?
Yeah.
Or is this a one-time thing?
Right.
What's going on here?
Okay, so we've got these big payouts, expansion plans.
Right.
What else can we uncover as we keep going?
Let's see. So let's look at the people running the show here.
Okay.
Premco just reappointed 2 executive directors, Ashok Harjani, the managing director, and Lokesh Harjani, an executive director.
Yeah.
And this is where it gets a little interesting.
Okay.
The document says that these directors are interested in each other.
Interested?
Yeah, what does that even mean?
Yeah, that's pretty vague.
Well, in corporate speak, interested usually means family.
Oh, so they're related.
It sounds like it. Yeah.
Okay, so we're dealing with a family-run business.
Seems like it.
Nothing wrong with that.
No, not at all.
Lots of successful companies are family-run.
Of course, yeah.
But it does raise some questions about corporate governance.
Absolutely.
Yeah.
Family businesses can be great. But when too much power is within one family,
Right.
it can lead to decisions that maybe aren't in the best interest of all the shareholders.
Right. They might make decisions that benefit the family more than the shareholders.
Exactly.
Okay, so that's something for potential investors to think about.
Definitely.
How do we know there's enough oversight on the board?
Right. We need to know if their interests are protected.
Yeah. Is there enough independence?
A healthy board should have a balance.
Yeah.
Different perspectives,
Yeah.
independent voices.
To make sure everything's on the up and up.
Exactly. Making sure decisions are in the best interests of the entire company.
Okay, so we've got big dividends,
Right.
expansion plans, family dynamics. Anything else we need to consider?
Let's go back to the auditors.
Oh, yeah, those guys.
They're important.
Yeah, they verify all the numbers.
Right. Make sure everything is accurate.
Okay.
So in the November announcement, there's a limited review report
Okay.
from SP Jain and Associates Chartered Accountants.
And in the May document, there's a full independent auditor's report
Yeah.
from that same firm.
Right.
What's the difference?
A limited review is kind of like a quick checkup.
Okay.
A full audit is more like a full medical exam.
Oh, okay.
It gives you more assurance because
Back
they go way deeper.
into the financials?
Yeah, they look at internal controls, transaction records, all the documentation.
Make sure everything's in order.
Right.
So a full audit gives investors more confidence.
Absolutely.
Okay.
And the May document also mentions they appointed some internal and secretarial auditors.
Okay, more eyes on the financials.
Yeah. Ms. Chaturvedi and partners are the internal auditors
Okay.
for this year.
Okay.
And Ms. Abbas Lakdawala and Associates LLP are the secretarial auditors.
Okay, multiple sets of eyes. That's got to be good.
It's definitely a good sign. Yeah, it adds another layer of scrutiny, helps ensure things are being managed properly.
But we still need to read the auditor's opinion.
Oh, for sure. Yeah.
What were they thinking?
Exactly. But do they have any concerns?
Any red flags?
Yeah.
So no concerns is a good sign.
An unmodified opinion means everything looks good.
Okay.
But it's still super important to read the whole report,
Whole thing.
not just the opinion.
Right. Sometimes the details can tell a different story.
Yeah, you gotta look for context.
Okay, so we've got all this info about Premco,
Yeah.
some promising financials, but we've also got some potential problems.
Right. The company seems to be doing okay,
Yeah.
at least from the surface.
Right.
But that special dividend, those expansion plans, and the family on the board,
Yeah.
it raises some questions
About the future.
about their strategy.
Yeah, and there's long-term strategy.
Yeah, and their commitment to good corporate governance.
It sounds like there's some risk here,
There's always risk.
but there's also potential for good returns.
Right. You got to weigh the two.
Yeah.
This has been a good start to our investigation, but it's just the beginning.
Right? Investors need to do their own due diligence.
Always.
So it's like we've been putting together this puzzle,
Yeah.
looking at all these different parts of Premco
Uh-huh.
to see if they make sense for investors like you.
Right. We want to paint a clear picture.
Exactly.
So we've seen some promising things.
Yeah, but the
Yeah.
financials are pretty good.
Right. But then there's also some things we need to look at more closely.
Yeah, the dividend and the family stuff.
Yeah, exactly.
So that's where the real detective work comes in for you.
Right. We've
Yeah.
just given you a starting point.
Yeah. You need to dig deeper.
Ask those tough questions.
Figure out if this is the right investment for you.
Exactly. We've given you the map and compass.
Yeah.
Now you got to choose the path.
So what are some things we should keep in mind?
Well, remember, investing is all about managing risk.
Okay.
Every investment has some risk.
Right.
You got to figure out if the potential reward is worth it.
You don't want to jump in without understanding the downsides.
Right, so think about those red flags.
Yeah.
Could that dividend be a problem?
Yeah.
Are they taking on too much debt?
What about the family?
Yeah, could they make decisions that hurt the shareholders?
So many questions.
And it's not just Premco itself.
Right. What about the bigger picture?
Exactly. How does Premco fit into your strategy?
Yeah, what are your goals?
Are you looking for long-term growth?
Or short-term gains?
You got to find investments that make sense for you.
And diversification is key.
Don't put all your eggs in one basket.
Even if you do invest in Premco, make it part of a mix.
Right, a diversified portfolio.
So if someone wants to learn more about Premco,
Yeah.
where do they go?
Well, the company website's a good start.
Okay.
They usually have investor relations sections.
With all the reports and stuff?
Yeah, annual reports, financials presentations.
And what about independent resources?
Yeah, there are websites and publications that analyze companies.
Okay.
And you can always talk to a financial advisor.
Right. If you need help understanding everything.
Exactly. They can give you personalized advice.
So we've covered a lot today.
Yeah, we looked at their financials,
Their growth strategy,
their leadership.
even the auditors.
And the important thing is you know what questions to ask now.
Yeah, as you investigate Premco,
Remember, investing is a journey.
the more you know.
The better decisions you'll make.
So keep learning, keep asking questions.
And keep those detective hats on.